A company has a defined benefit pension plan for its employees. On December 31st, year one, the accumulated benefit obligation is $45,900. The projected benefit obligation is $68,100, and the fair value of the plan assets is $62,000. What amount, if any, related to the defined benefit plan should be recognized in the balance sheet at December 31st, year one? All right, so first things first is we could just consider the accumulated benefit obligation as a distractor, so we can go ahead and just forget about that. And we know here that we are going to report a pension liability for a defined benefit plan simply by taking the difference between the projected benefit obligation and the fair value of the plan assets. So that's just going to be the projected benefit obligation, which is $68,100, and the fair value of the plan assets, which is $62,000. So the difference between that is going to be $6,100, and that is simply all we're going to do when we are reporting our liability.